So the whole day we've really been debunking the whole creator ecosystem. Most of the conversations have been around how do I make money. I think now we've gotten to a point, or assuming we've gotten to a point in the journey where we have made the money, right? So for clarity of what the objective or the purpose of this discussion is to help us bridge between I have now made the money or making the money, but now I want to invest it and grow in that aspect, right? And maybe I will start with Kennedy, who is representing Mercy from Jubilee Group. Maybe if you can tell us in your own words, what is the difference between earning wealth and building wealth? Because again, we're talking about financial well-being, right? So what, in your own words, would you feel is the difference between earning it and...
Okay, thank you very much. Thank you for the opportunity to speak on this platform. Earning wealth is the aspect of generating an income. Building wealth is the aspect of the income that you have already generated working for you now, without you now in a space where you are working to now generate that income. So I can, in simple words, I can say earning wealth is the work you put in place, the day-to-day work that you go, either it is you're working for someone, either if it is the content that you're creating, the business that you're running, that is the earning of wealth. Now the earnings that you have generated, investing in them to a portfolio or somewhere which can be able now to earn for you without necessarily putting hard work on that, that is now building wealth.
Wealth is passive, an additional, other than what you do. So having said that, why do so many high earning creators live paycheck to paycheck? What is it that they're doing wrong, or what do you see as a challenge?
One thing I can say about creators is, number one is when you start generating that income, either on a timely basis or on a monthly basis, first thing that you need to sit down and think about is having a budget. That is the minimal start point that you need to have. Having a budget, then as you're budgeting, make sure that there is a place for the income that you have earned, the expense that you incur, plus now the surplus that you're getting, you at least save it. Either the vehicle that you might use, a policy, an investment portfolio, you can always do that. But now, the problem that comes in, one, we can say that, as I had heard Terence saying, you are having to allocate a few investments, make sure that you allocate surplus funds that you get in a portfolio which can be able to generate you at least an income. Why? Because you find that there are some creators who burst, I can say they burst in a moment. Maybe they have, it is their moment at that particular time. They get a gig, they're paid $1 million, $2 million for that gig. But now, this is not, we can say for their situation, it is not a sustainable income. They reach to a place where you've gotten someone else who now outshines you. So the investment that you had put initially is the one that you will be eating at that particular time when now your numbers are
saving for a rainy day. All right. So to build onto that, Martin, as content creators, you know, we are not on not like a salary structure where every month on the 20th, you know, you're going to get your monies, right? Some months are good, some months are bad, right? So how then, as a financial advisor, would you advise a content creator to work around a budget when they don't have a specified budget, or their income varies to 100%?
Okay, maybe when you're talking about long-term planning and you're not receiving money on a month-by-month basis, there are avenues where you can put money on a quarterly basis, semi-annual and annually. That way you're able to plan yourself if during those seasons, during your bad seasons, you know at least you have 3 months where you can do another top-up in a particular financial plan where you're thinking long-term even in the years, but you're doing it on a quarterly basis. You can do it on a semi-annual basis. There's no pressure, and you can also do mdogo mdogo in terms of the guaranteed savings that you're doing over a long period of time. So you don't have to overly commit to it, but at the same time, you're guaranteeing your future ultimately. Even if you're not making an income on a month-by-month basis, that should not limit you from investing or saving long-term. There are avenues where you can be doing it on a quarterly basis, semi-annual, or even on an annual basis. There are avenues that even allow for one-time investments where you get a lot of money at once, maybe from your gigs or whatever the creators are doing and the money that they're generating and the income that they're getting. So you can explore avenues where you're putting your money on a one-time basis. You leave it there for a period of time, even if it's a set number of years, and it grows and it doesn't have the pressure for you to do it on a month-by-month. Yeah, that's how I can answer that question.
I like that you mentioned that, and during the course of the day, we've also been looking at different avenues, conversation around multiple streams of income, right? So you can have what you're talking about as one framework, but you also have something else that you do financially that pays your bill, or you know that this certain project is consistent enough to be paying my rent every month. Now I just need to look for the surplus and then invest, as Kennedy said, on that surplus and build a healthy financial portfolio. So Anthony, to you, what partnership or what initiatives has benefit?
So Anthony Modera is my name. So we have different types of products as Jubilee Insurance that would benefit you as a creator. Sometimes we normally say, if Terence, if I can use you, if Terence is unwell, he's admitted into hospital, his business has gone to hospital with him. True. And I think this is a reality for many of us. So we do have specific products that would sort of like income replace if certain insurable events happen to you. So we have things like a hospital cash. So if you're admitted into hospital, every night you're into hospital, you can pay you 1,000, 2,000, 3,000, 5,000 for every day you're admitted into hospital. And the premium for that is inexpensive because you'll pay like 5K a year for a 5K cover, which will cover you for 30 days in a calendar year. So if you're admitted, and so we have different products that can drill down into you as a creative, you who stands on your own as like your own business. So we have different products like that. We also have flexible solutions. I know a long time ago, people used to say, if you take an insurance plan and you don't pay for a certain number of months, you lose out your money. But we have plans where you, in essence, will gain, and we don't have those punitive surrender values. So we have, across even the money markets that we have, so we have products that are specific to creatives in that sense.
Right. So most of the people in this room are probably starting off in their content creation journey, right? So most of them probably, or some, well, let me assume a number or two, may not have a bank account. They have no formal financial history. Where do they start? Yet they need the capital. And I think that question can cut across that. Everyone can explain what unique thing that they are doing to fill that gap.
So maybe I can just kick it off. Where do they start? Terence, I think, also said something very unique for a creator. He said, if I get 1 million shillings, I don't budget on 1 million. I budget on 700K. And I think that's very prudent because even as my other panelists have said, rainy days will come. That contract that you got in January may not replicate next year, January, like it may not replicate. So you need to keep some money aside. So one way that you can begin to establish that financial footprint is by also using other channels of savings. You have, even if you don't have a money market account, a bank account, you can open money market accounts. You can take life insurance plans where you can just bump that 30% or a portion of that 30%, because then it gives you a track record that you are growing your money, even if not in a formal way. And mobile money wallets have also stepped in to help in that direction. I think that would be my take. Yeah.
Just to add, we have unit-linked investments that offer liquidity, and we understand that when creators are starting off, cash flow is key, or they say cash is king in these streets of Nairobi anyway. So liquidity is very important, and we have unit-linked investments which are designed in a manner where you can lock your money for the first 2 years and you have it liquid to entirety up to the end of the period that you're saving, or you can leave it open where it's liquid and accessible. So it's just having that futuristic mindset and also understanding that you're investing long term. Like in Britain, we know where unit-linked investments are doing 13% per annum, and they're in liquid investments, and the starting amount is not quite high. It's affordable, like from 1,000 shillings where you're doing regular savings, and we're not telling you to lock your money or to prevent you from accessing that money that you're putting there if cash is king. So basically, that's what we're trying to advocate for, where you're putting money on a regular basis and you're not committing it. Even if you're committing it long term, you have liquidity throughout the period. Over and above that, when you're talking about insurance, it's very important to protect yourself and also protect your investment in terms of the tools that you're using for content creation. And that's why insurances like home insurance, they come in and they factor in even the gadgets that you're using for insurance. You had talked about protection. That's what I'm getting at. So protecting yourself in a way that if you're to suffer a loss, you get a payout that will help you replace whatever that you've lost. So that's essentially or ideally the basis of insurance in general. Protecting yourself while also trying to grow your income, or the little monies that you're getting here and there to grow, while also protecting yourself through insurance. I think that's very important, even as you're generating income in this data economy. Yeah.
Ready? Your take?
Thank you. For me, I think I'll talk of the saving culture that we need to enact also to our creators, because when you get an income today, you might not get that same income, or you might get even a higher income on a later date. But what I may encourage all content creators to have is just that small steps. Start off with that investment. Our current investments available, you find yourself, you can start even with as low as 1,000, as low as 100 shillings, and you can grow that portfolio to a place where you can either request for financial support from a financial institution, because you have that track record of that savings that you have been doing for that particular time. So mine is big on the financial space. Currently is very wide. It is not like 10 years ago. We have investments such as money market. We have investments such as fixed income funds. We have equity funds, which you can start off. We have special funds available, which you can be able to even start off as you continue with as you channel your investments towards different investments vehicles that are available. So encourage big on saving. If you save a lot, then it means that you get to hold also the future in a proper way. Yes.
Amazing. Thank you. So as a parting shot, as I said, we're going to keep it short and sweet, yeah? And we'll start that end so that I finish on this end. What would you say is a service or a resource from financial institutions that creators are not tapping into in your own respective institution. So there's something that is created, or maybe any other person, it doesn't necessarily have to be a content creator, but what is that one thing we are not tapping into when it comes to the services and products that financial institutions offer?
Thank you very much. Currently, I'll say that the resource that actually the public is not tapping into currently is the interest that most investment portfolios are giving. How will I explain that is that currently you find that there is high interest rates that are offered in the market. Most money market funds are above 7%, above 8%, 10%. Most equity funds are going up to 40, 50%. When you look towards 10 years ago or 5 years ago, most fixed deposits were offering only 3%, 4%, or 5%. The investment space currently is wide. You can enter into a market, have an investment product, get a better interest. Within a few years, that is within 1 year, 2 years, you can even double your investment. So I can say that the public is not taking advantage of the current opportunities which are available. Why? Because when you look at the statistics, the amount of or the percentage of savers in our country, that is Kenya, is below 10%. So it means that most money are lying just in the current account, being affected by inflation, but not earning you any further return. Yes.
Thank you. Martin, your parting shots.
My parting shot would be, we offer policy loans. I think that's one thing most people are not aware of, in terms of if you are to put your money aside for a long period of time in a guaranteed fund, you're, other than getting the return or the interest that has been mentioned, you're also able to qualify for a policy loan. I think it's a benefit most people overlook, over and above getting an interest or saying that you're just saving or putting money aside. So that's one thing I've noticed that most people don't take advantage of. In short, what I'm saying is you can borrow against what you've already put aside. So that's an advantage I think most people, not only creators, can leverage on in terms of getting liquidity from their savings or getting an interest. Yeah, I think that's my parting shot for now.
Wrap it up, Anthony.
I think all of them have said one simple thing, the power of compounding interest. So let me just do a math here. Assume you're maybe average 25 years of age today, right? And if you take a leap and say, for every month until I'm 25, so every month until I'm 55, I'll just put in 400 shillings a month. If I ask you how much you've eaten for lunch this month, for sure it's more than that 400 bob. So if you just put it, like say, in a pension plan, in those 30 years, you'll have put in 254K. Okay? So I'm doing my math, so my phone is open. Don't think I'm genius like that. 254K. But do you know how much that 254K will be equivalent at the end of those 30 years? Any guess? Yes, any amount. I don't know.
Sorry, repeat your question.
So you've put in 400 bob a month for 30 years. So you've put in 254 Gs. That's your principal amount. So would you guess how much that would be equivalent? So you're coming to Jubilee after 30 years and saying, I put in 400 bob. After 30 years, I own my money. How much money do you think Jubilee will give you? To be precise, it's 5.5 million. Can I say that again? Yeah. You've put in 400 bob a month for the next, say, 30 years. So if you do the math, you'll have done about 254, 260K. But when you come to Jubilee after those 30 years, because of compounding interest, your money will be equivalent to about 5.5 million. That 5.5 million, as I close, I'll say one thing. Today you're young. even the athletes who run when they are 18, 17, 16, they'll reach an age where they can't run as fast as they used to. Is that true? And I think you guys also know some of the athletes out there. You will grow old, and somebody younger than you will have twice the energy that you used to, and they'll replace you. So put that money aside, because then it will come to help you at that future. Terence said he puts 30%. Me, I'm telling you, put 400 bob aside, and you will see the difference. Because that power of compounding interest can do magical numbers. That would be my parting shot.
Okay. So start small, start where you are, consistency over time. You will grow and you'll reap the benefits of it, yeah? So if you're not already, and there are very many tools that you can do. I mean, Chums even reminds you, kama leo unaenda Dunda inakuuliza, umepata discount, umesave kwanza before you go out, right? So such tools that are there and available to you for free to do all this. So a round of applause and thank you very much to my panelists. It has been a very, very compact day with a lot of conversations going on.